The other day I was speaking with my friend and he asked me a question. Sahil, I'm already investing in stocks, equity mutual fund, debt mutual fund and a bit in gold. But I want to further diversify my investment and I was considering investment in real estate. But the problem is that real estate is too costly. I don't have 50-60 lakh to invest. Also, I don't have much knowledge about real estate. So is there a way I can diversify my investment in real estate with low investment amount? I'm sure many of you would be baffled about this question. Is there a way to invest in real estate with a small amount? Hello everyone, my name is Sahil and this is my Personal Finance Academy. Well, a few years ago, if you had asked me the question about investment in real estate with a small amount, I would have said no. It takes few lakhs to buy a piece of land. And if you want to invest in real estate of a metro city like Mumbai, it would easily cost you at least 50-60 lakh rupee. And when it comes to commercial real estate, a normal retail investor can't even think about investing. But today, there are a few options for retail investors to invest in real estate. And not just in any real estate. An option to invest in one of the hottest commercial real estates of India as well as across the world. And the best part is that you don't need a few crores for that. In fact, what if I tell you that you can invest in a top commercial property of Bangalore, Mumbai, Delhi, Pune under rupees 500? Sounds crazy, isn't it? In fact, you can even invest in some of the top commercial properties of the world, including Singapore, Australia, with as low as 5,000 rupee. Don't believe me? Well, I'm sure you will believe me by the end of this video. By the way, this is all legit. The answer is REIT investment. While some of you might have heard about REIT, I'm sure many of you would be alien to this concept as this is a relatively new way of investment, especially in India. Although REIT are quite popular in developed countries like US. So in this video, we will explore more about REIT investment, how it works and what are the available options for investment. I have divided this video in 6 parts. What is REIT investment? How does it work? Type of REIT, how to invest in REIT, risk versus return and pros and cons. Alright, let's get started. Think this way. Many people in India like to invest in commercial and real estate property for investment purpose as well as source of regular income. While commercial properties are more attractive with higher rental yields, they are way too costly for an individual retail investor. Hence, retail investors end up investing in residential properties. But investment in real estate is not a cup of tea for many investors as it requires a lot of money. So basically, the biggest bottleneck for investment in real estate is money. And that's where some smart guys thought of pooling money from various investors and investing in real estate. And the best part is that retail investors do not have to take any headache of maintaining the property. So REIT stands for Real Estate Investment Trust, which is a company that owns and manages income generating real estates. Mind you, these real estates are income generating assets where REIT owner would rent out the commercial building and generate income. These REITs allow investors to invest their money in commercial properties and generate income. This income is in the form of dividend and appreciation in the value of the stock. So these REITs are traded like stocks. I'll come to that later. Now, what could be the various type of real estate based REIT? For example, it could be a tech park or a data center or a healthcare unit or a commercial complex, etc. Now, there is also a concept called InvIT, that is Infrastructure Investment Trust, that invest money in infrastructure assets like roads, power plants, transmission lines, pipelines, etc. Although in this video, we'll only cover REIT. Maybe I can create a separate video on InvIT sometime later. Let me know if you want me to cover a video on InvITs. Now let us first try to understand how exactly REIT works. The process of REIT investment is actually similar to mutual funds. Individual retail investors like you and me can invest money in the REIT, and just like mutual fund house, these REITs have managers that manages your fund along with REIT sponsor and team of trustee. They invest the money in real estate properties and in turn generate rental income as well as price appreciation in the property. This money is eventually passed on to the investor in the form of dividends as well as capital growth. Please note that the REIT investments are an income generating commercial real estate mainly in the form of rentals. And 90% of the income from real estate is paid back to the investor. It means REITs are a good option for dividend, but the growth prospects are on the lower side. Now, first type of REIT is equity REIT. It is the most popular category of REIT. In equity REIT, the company owns and manages the real estate properties. The revenue is mainly generated in the form of rentals, and the income is then distributed among the REIT investors as a dividend. Then second category is mortgage REIT. Here, the trust doesn't own or manages the property. It would lend the money to real estate company. So in this case, the major earning would be in the form of interest income on the money lended as loan. And then the third category is hybrid REIT that invest in both equity and mortgage REITs. So far, there are two options to invest in REIT. First option is directly in stock-based REIT, and second option is via mutual fund-based REIT. In stock-based REIT, the REIT is just treated like a stock. Since it is a very new concept in India, currently there are only 3 listed REITs in India. The first REIT that was listed on exchanges was Embassy Park REIT, which was launched in April 2019. Embassy Park REIT has a portfolio of 8 office parks, then 6 hotels and a 100 megawatt solar power plant. It comprises 33.8 million square feet completed operating area with an occupancy of 87% as of 31st March 22. Out of this, 74% real estate is in Bangalore, 10% in Mumbai and remaining in NCR and Pune. Then next REIT is Mindspace REIT, which is sponsored by Raheja Group. Again, a diversified REIT with office space across Mumbai, Pune, Hyderabad and Chennai. Then third REIT is Brookfield India REIT. So you can invest in these REITs just like your stock investment. And these REITs are currently available at below rupees 500 just like a stock. But before you invest, you can explore their financials, future prospect, dividend payouts, etc. just like other stocks. Now next is mutual fund based REIT. You remember I said that you can invest in a property of Singapore or Australia with as low as rupees 5,000? Well, I was talking about this mutual fund based REIT. There are currently 3 mutual fund based REIT. First is Kotak International REIT Fund of Fund. Since it is a fund of fund, it invests in multiple REITs. Just like mutual fund invests in multiple stocks, this REIT Fund of Fund invests in multiple REIT with properties in Singapore, Australia, etc. Then second is PGIM India Global Select Real Estate Securities Fund of Fund. And third is Mahindra Manulife Asia Pacific REITs Fund of Fund. Now if you look at the risk versus return, first of all, REITs are regulated by SEBI. So it is not that REIT you invested in could tomorrow pack their bags and disappear. Moreover, there are guidelines on REIT investment and the fund house can't invest in any random property. There is low risk involved in REIT as minimum of 75% of the assets are invested in revenue generating projects that are completed. Having said this, the price of REIT would fluctuate every day just like stocks, and the dividend income would also vary. Now in terms of return, since the REIT market is at its nascent stage in India, there is not much historical data at this point in time. However, in developed countries like US, the returns from REIT are somewhere between bonds and stock. So in India, currently you can expect a return in the range of 5 to 7% in terms of yearly dividend yield, plus around 3 to 4% annual capital appreciation over the long term. So it is not that you will generate a huge amount of return out of REIT, but it is another way to diversify your investment via real estate. For example, in FY22, Embassy Office Park REIT has declared an equity dividend of 21.81 rupee per share, which was equivalent to 7.27% yield. Likewise, in FY22, Mindspace has declared a dividend of 18.6 rupee per share, resulting in a dividend yield of 6.8%. So like I said, the dividend income would be in the range of 5 to 7% and the stock price is completely linked to market performance. If you look at the pros and cons, first advantage of REIT is that it gives you an option to diversify your investment. So you can diversify your money apart from stocks and mutual fund by investing in real estate. The best part is that you don't have to take the headache of managing the property. Moreover, everything is legit and under the regulation of SEBI. Then second benefit is it gives you a chance to be a part owner of top commercial properties around the globe. REIT investment is not just limited to your area, but you can actually invest in a property of Mumbai, Bangalore, Singapore while sitting at your home in a small town. Then third benefit is regular dividend based income. REIT also gives the opportunity to generate regular dividend based income. And fourth benefit is very high liquidity. In case of real estate, when you try to sell the property, there could be a case where you don't find the buyer at the right price. So there could be a liquidity constraint if you buy the real estate directly. However, with REIT, you have complete liquidity. Since it is traded like a stock, you can sell it anytime. Now, if you look at the cons, first is low growth prospect. Since 90% of the income from REIT is paid out as dividend, so the capital appreciation is low. Hence, the growth prospects are also very low. It is more suitable for those looking for dividend income. Then second disadvantage is REIT prices are linked to market. Since these REITs are listed just like a stock, it is linked to market fluctuation on a daily basis. Hence, just like a stock, REIT price would fluctuate on a daily basis. So it is not suitable for those who have a very low risk appetite and only looking for fixed return. Then third is no tax benefit. The dividend payout from REIT is taxable as per your tax slab. So there is no tax benefit from REIT. If you want to invest in stock-based REIT, you can simply invest in REIT just like a stock from your trading account. Just search the name like Embassy Park REIT or Mindspace REIT or Brookfield India REIT and you will find the option. Remember that when you invest in these listed REITs, you will have exposure in real estate of India. And if you want to invest in global real estate, then you can consider REIT-based mutual funds. Again, you can invest in these REIT mutual funds just like any other mutual fund. So in this video, we explored the REIT investment options in India. As discussed, you can invest in REIT via both stocks or mutual fund route. Although REITs are still in a very nascent stage in India, it provides an opportunity to diversify beyond your stocks, mutual fund, gold, etc. The big question is it worth investing in REIT? Like I said, REIT can help you diversify your money. So you can consider investing a small portion in REIT. But make sure that you do your research before shortlisting an REIT. And if you are not confident, then you might want to track the performance of these REITs for some time and then take a decision. In the future, I expect more such REITs around real estate, including your data centers, tech parks, commercial properties, etc. Now, what are your thoughts on REIT investments? Do let me know in the comments. And if you find this video useful, do share it with your friends. And for more informative video in the future, don't forget to subscribe to this channel and click the bell icon. I'll see you next video. Till then, take care.